Okay, hello everyone. This is Giuseppe Basile, also known as the Fib Stalker. You can find me on the web at www.fibstalkertrading.com, as well as on Twitter at FibStalker. This is the second part. In this part, I'm going to review for you the US versus Japanese yen, the euro versus Japanese yen, the pound versus Japanese yen, the pound versus US dollar. So before I get into that, I want to remind you that I'm recruiting for the September-October 2015 Vistalker Methods Coaching Program. This is the fourth session of this successful program, and if you want to join, I'm going to teach you as I'm doing and I've done to a number of students the formula to identify the effects of algorithms on price, and I'm going to explain you how the price structure can be framed, and how the market moves, how you can identify different type of setups. We'll talk a lot about risk management. Risk management is trader's job number one, and I have different ways to manage risk from a from a price mechanics point of view, from a process point of view, because I want you to get advantage only of the best opportunities, as well as of on a statistical viewpoint. So you will learn the Fib stalking timing in detail, which is this technique that allows you to study the sequence of measure, move, counter trend, and pick area of participation on the upside only after confirmation. So if you're interested, let me know, send me an email, and I will give you more information. So let's continue here with the US dollar versus Japanese yen and see what has happened in the last few weeks here. When we go back to the weekly, we know that in the past this market actually has traded in extension and is still trading in extension quite successfully on different time frames. There was participation in 94, first and second target hit, and then the market never came back to the next level, not yet. This is what the weekly are waiting for, to see whether there will be participation there. And then, as you can see, lines up with that second target of the previous measure move. What we have seen on the daily time frame as well, and we can see that on the weekly, is that there was this area of participation here that was identified with one week and a half in advance here. Participation came at this 116 level twice. We can see here participation at this level here, and then again at this level here, and eventually price was brought into that first target 124.76. After that there was profit taking, and this market started correcting, and we just applied rules, and the market actually came back to trade the next measure move here, touching the 61% almost to the tick, but that's never happened. And so this market reacted within this area, which is what we were anticipating. So at the moment, this market is battling between that area of support that we have on the daily here and an area of resistance. So it's really moving between these two areas here, between the shorts that start at 120.71, and we can also trace the highs to lows here, which identifies the a better area of resistance here. And we can see in this area the market was pushed lower 4 times, 5 times here. This is quite a strong area. So this market is moving between these two levels, and if it goes down to 118 here, there might be a new opportunity to go long this market. Euro versus Japanese yen. Those who follow me know that this market is actually in the process, and it's taking really a lot, possibly to retest this area to see whether the weekly are going to participate. The reason for that is the full sequence of measure move here has failed, and those who follow my method understand why the full sequence has failed. And so now we are looking for this level to be retested. Now this market has been since the beginning of since the third quarter here, beginning of April, this market has been moving higher, started moving higher, and we saw the break of the all the way halfway back there, 140.72, which could suggest that this area becomes an area of profit taking as well as new longs. So if we get there, this area could be an area where we see a sensitive bounce. At the moment, this market is actually moving laterally, and as we can see here, it's moving laterally below these 137, 184, and there is another level that it's important and has been retested already on Friday, and this could push this price lower into, again, first target 132.13, but it could continue lower into the 130.48. Next is the pound versus Japanese yen here, and this market also has been trading an anchor that we identified after the fact. It was not possible to identify this anchor before the fact, so sometimes we have to adapt because the algorithms change, but nobody sends us an email. So we need to readapt. That's not common, but sometimes happens. So this market actually has been moving higher from this new level 174, which was tested almost to the pip here. Then halfway back as traded here, we saw market participating, and although this did not bring the target, this price to the target, these are always very good trades, especially if you time them on the smaller time frame, like the 15 minutes, for example. So this is 85 to 94, and depending on how much is your risk, this can be a very profitable trade, even if you just keep for 2 days, 2 weeks here, sorry. So this 182.85 has been pierced on the downside, which means that bulls are not willing to sustain this price. And of course there is here, like in other markets, there is an opposing measure move, which is actually pushing price lower. So it wouldn't be surprising to eventually see this price moving back and retest that 174.80 level here, which is what we have potential support. There is nothing within these highs 187 and these lows 175 here that justifies a more an inversion or a move higher for this market. And finally, for this section, the pound versus the US dollar. Now this market actually has been trading on the weekly time frame here, the highs to lows, there was participation very clean at this 159 here, 158.80, and this has the potential to push price lower into what? Into this 139.50 level here. So from the very large time frame is actually showing this market, a continuation of this market, a continuation lower for this market. Now on the weekly, you can also see an all the way halfway back here that however has been pierced, but that has not has actually not prevented this market to continue lower, as we can see. So this market could actually move into 149.88 and even lower into 146, 147 here, which is the second target, and then a reverse, and then we could see a reversal in this market for a continuation lower. So this market is actually moving lower, and on the daily time frame here, this market went to retest an area that was pierced at the very beginning, but that was retested, and that's not normally what we look at, so that's not something that could have been easily anticipated here. And also the next measure move has pierced, so this would not have granted a trade, for the reason that there was also a long that was in play on the other side of this market. So as you can see, this long is still in play until we actually break that 150.95 level there. And this is it for this section, and I want to remind you once again that I'm enrolling for the FIPS Cameras coaching program. If you are interested, you can join, and you will get a number of bonuses here that no one else gets. There's a lot of value here, and you also get pre-written trading system from me and 6 brand new live webinars that I'm recording in September to help you reach profitability and then to reach consistency. I'm also talking about these topics on fxstreet.com, for which I am premium contributor for the webinar service. I started talking about the journey to profitability and then trading consistency, but in my FIPS coaching program I get into the details, and for you to replicate a process that allows you to reach profitability and then consistency. Thanks a lot for watching, and have a great evening and a great week. Bye bye now.